here on Wall Street Silver, and I just have to show you this before we get into it. A really funny meme. We just create worthless electronic money out of nothing, then we lend it out and charge interest on it. Then we make them give us their houses in real wealth when they cannot pay. Ain't that a shame? And the one thing about real wealth that we've been seeing recently is the amount of attention that hard assets like silver and gold have been getting in recent months, particularly silver. Unfortunately, we had a little bit of a hit in the past couple of weeks, but we are on the mend. Now, the trend is our friend, and I promise you I'm not trying to rhyme for any particular reason. It's just coming out that way. But the trend is our friend right now, and it looks like we are starting to see some positivity here within the price action for silver. But in today's episode, I want to give my overall view as to why I personally think silver and gold will continue to rise and rise, pretty much until the Fed starts raising rates and things start getting crazy and the dollar starts to rebound in its cyclical fashion. And it all comes down to cycles. So right now we're looking at silver, and I've told you before that the yield curve is still relatively low historically, compared with the peaks that we've seen of the yield curve post a recession. So we haven't even gotten to those peaks yet. So that's good. Why does this matter to gold and silver? Well, when the inflation or when the yield curve steepens, it helps gold and silver because there's an anticipation or an expectation of further inflation. And we've been seeing the yield curve dip a little bit, but in my view, it'll continue to rise. Why? Well, generally the world is reopening. And for many of you guys who have been watching my channel for a while, you know that I have a global macro view, meaning that I like to look at world GDP. I like to look at where we are in the business cycle. I like to look at where we are, with a lot of cycles, and then funnel it all the way down to what we see in a particular asset, specifically with silver, in today's episode. Now, commodities have been doing some interesting things recently. And you may have been paying attention to other commodities in addition to silver, such as copper or lumber. I'm going to be touching on these two because they are very important commodities within two of the largest economies in the world, China and the United States. So first, we're going to start with copper because I think that's one that a lot of people just naturally pay attention to when they think about gold or silver. They think about Dr. Copper here. Now, Dr. Copper, basically since May 10th or so, has been coming down in price. What we're looking at here is the copper to gold ratio. Generally, when copper is rising, it's reflecting the rebound of global markets. The main reason why is because 50% of copper is actually bought by China, and China is pretty much the world's manufacturing hub. So it needs that copper. And as you see, basically since the beginning of the 2020 issue, we've been seeing copper rise at a faster rate than gold has been rising, which is essentially expected given the fact that we are on a rebound here. But since May, we've been seeing it come down as gold actually during this time started to rise again. But gold took a recent hit, obviously. But when seeing this, some might say, oh, well, maybe something bad is happening. Maybe things are changing. Maybe we're going to start seeing the world slow down a little bit. But honestly, the reason why we're seeing this is purely due to manipulation that we're seeing in the markets via China. And they've actually been very vocal about this. Take a look here. Here's an article regarding some of the price changes that we've been seeing in copper. And I'll start here. Copper, a crucial ingredient in the green transition, was billed as the star of this supercycle. The metal is down by 15% since hitting an all-time high last month, although it has still gained 14% since the start of the year. Copper has suffered a 1-2 punch from the US and China, says Nathaniel Taplin in the Wall Street Journal. Hints of tighter monetary policy and doubts about President Biden's infrastructure bill, which is being delayed by congressional bickering, could mean U.S. demand proves weaker than predicted. Well, funny enough, we got news about the infrastructure bill and it did pass. So with more green or stronger pushes for that green transition, it's going to be realized, and we're going to start seeing copper prices react to that for sure in the future. And I continue. Meanwhile, China has been clamping down on commodity speculation and released copper, aluminum, and zinc from its strategic stockpiles in a bid to keep a lid on prices. Now, here's the important part, guys. The country consumes half of the world's refined copper. It would be premature to say prices have peaked for the cycle, but the next few months could get rocky. And that is essentially my view. What we are seeing is essentially manipulation on the behalf of China on copper prices, making one think, okay, this whole inflation thing is, just a bunch of guys yelling, saying, hey, the sky is falling, inflation's here, blah, blah, blah. What's really happening is that China is actually just keeping prices down by releasing some of the stockpiles. But because it consumes half of the world's refined copper, and because we did pass this infrastructure bill, we are going to see more demand for copper. Inflation is definitely coming, and it will be reflected in this commodity. It may not be sooner, and like this person said, in the next couple of months, but it will come back. Now, another commodity that is reflective of a large economic superpower is lumber. And it is the representative commodity, in my view, of the United States because, well, nearly 20% of US GDP comes from the housing markets, which is pretty large. So if you take a look here, this is actually a graph from 2004 to present of lumber prices. And as you can see here, basically it's skyrocketed within the last year, which is not common if you take a look at some of the price movements for lumber. Now, why is that important? Well, as we know, people have been looking at lumber, especially a lot of the people who are saying that inflation isn't a problem. They've been pointing to lumber saying, hey, look, now that prices are dropping dramatically, inflation isn't a problem. The thing about about lumber in the United States is that the business, the value chain, just the overall business of the industry in timber and lumber actually took a hit several years ago, to the point where the United States actually does not have adequate amounts of sawmills and strong ability to within a short period of time push out the supply that is currently being demanded. However, we are starting to see that come back now. So we're going to start seeing prices for lumber dip down, but I do expect it to normalize, but I also expect it to still remain elevated given the fact that we are still in a commodity supercycle. We are at the beginning of a post-recession expansion. Prices will still remain somewhat elevated. Now, again, this was a freak of nature here, this event. I don't expect it to jump up this high in the near term, but I still, again, expect it to remain elevated. But I don't want you guys to think that because we're seeing prices in lumber just dramatically drop, that it has anything to do with the story on inflation. there are very particular parts within the industry that caused this price to spike. Now take a look at copper here. We just talked about copper in China, and I want you guys to see the graph because it goes as far back as 2004 up into the present time. And as you can see here, going back down to 2004, coming up here, this is the interesting thing. Now that we've kind of like hit this somewhat of a, you could say like a double top here, we basically went past it. We hit all-time highs in copper. It's starting to come back down. China's mad. They're doing some manipulation here. But just like the guy said, this isn't it for copper. Copper is going to keep going up. So even though commodities have been rising at the same time, some commodities have underlying economics that make it so that, okay, prices will dip down, but they will remain somewhat elevated. I think copper is a different story because of the actual manipulation happening with China. Once they're done with that and they need to actually start using copper and, selling products or creating products with it to sell, these prices are going to jump back up again. And that is essentially, for me, the canary in the coal mine. When we take a look at the value chain, when it comes to commodities, manufacturing, wholesale, resale, then hitting consumer products that we actually buy here in the United States, a lot of stuff kind of begins in China. So once we start to see those prices rise in China for copper or continue to rise again, I expect us to start seeing silver react in a similar fashion. I generally think that inflation basically is going to be a problem. I don't think it's going to be a country destroying problem or anything like that. I'm not one of those guys. I'm more of a, hey, this is going to be a problem for the near term until the Fed decides that they want to raise rates, which it looks like it will be in 2023. But guys, my view is that silver will continue to rise in the near term and maybe struggling a little bit, but expect prices to rise in the coming months. Let me know what you think about all this. Let me know what you think about the global macro view that I have. Let me know if it's helpful. And let me know also, are you looking into expanding your view or your perspective with a global macro view to help you better understand markets? Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.